Meanwhile, the breadth is not looking bad at all. We don't have any powerful movers. I'm looking at my FNO screen. So markets, you may use the word consolidation. Some would say it is simply marking time, because a lot of numbers which will start coming in from April, which is Q4 numbers, some would argue that markets know the texture of them. In fact, this time it could be reverse. Anywhere there is mild disappointment, the downside is much higher than a mild upside, which will create upside. Now the reverse happened. Reverse happened in October, when mild upsides were greeted with a lot of big spikes, and minor misses were missed because markets were different and the underlying assumptions were different. Now the underlying assumptions are nothing will go wrong, everything will go right, the economy is going to progress only higher, and there are no problems in the world. When that is the underlying positioning of the market, then mild surprises will be sold into, and mild disappointments will actually be creating near-term volatility. Nitin Chugh joins us now to talk about what is happening in the small finance banking space, how exactly has things settled down for the MSME and SME space, and what is happening in the accounts which he's managing and overseeing. Nitin, fantastic to have you back, and thank you for joining us. The pocket which you represent, largely this universal stroke small banking finance space, is a clear proxy to what is happening to the MSME and SME space. Now, given that right now the IBC laws will be changed and the government guarantee schemes have in a sense ensured that the can has been kicked down the road, what is your understanding of what is coming next in the coming financial year?
So Nikunj, thank you for having me here. I think most people have recognized, including us, as to what is expected in the rest of the next financial year. But I would also imagine that because of the CLGS scheme starting to mature, from June onwards, the 1-year tenure getting completed, we could see some of these accounts also behaving differently from what they might have been expected. Thankfully for us, we don't have too much of that. We were not able to do anything more than, I think, 55-60 crores of ECLGS lending, given the kind of portfolio that we deal with, the small borrowers. But yes, I think in the large accounts, especially for the larger banks, it remains to be seen as to how the whole situation unfolds in the next financial year.
Nitin, if I speak to your peers also, whether it is organized, whether it is listed or the non-listed space, whether it is Bandhan Bank or for that matter Jana Bank, all of them are echoing pretty much what you've flagged off, that the small borrower has not really got impacted. Now, my follow-up question to all of them is, so I'm going to ask you the same question, is why is that? We know that job losses have happened. We know at small borrowers, the pain of COVID has been felt. There are some job losses which are permanent. How come there is no reflection of this job loss in the small borrower segment? Because if nobody's feeling this.
I don't want to comment on what the others have said, but in our case, we have clearly seen that there has been an impact. And if you look at the small borrowers, starting with the microfinance set of or the segment of customers, there has been a very, very deep impact. There have been job losses, there has been loss of income, not to say that it has happened all across. And microfinance, again, if you split between the specific occupations which were more impacted than the others, some of the impact is going to be more prolonged. So I think we have recognized that and we have provided for that as well. Now coming to the MSE kind of borrowers, yes, I would think the recovery was a little better than what we had anticipated. But it's not to say that they have not been impacted at all. It is also probably not fair to say that they haven't experienced any pain or job losses or loss of business. I think they have recovered very quickly, no doubt about that. But at the same time, the lag that has come up in the repayments or the lag that has come up in their cash flows, stabilization of their cash flows, is expected to either play out in the next financial year if it hasn't been recognized as yet, or if it has been recognized, then I think most banks would have already provided for that. But I don't think it's a case where we can safely say that there hasn't been any impact on small borrowers. If at all, small borrowers have been more impacted.
Okay. Now, we are also looking at Ujjivan turning into a universal bank. Talk to us a little bit about the roadmap there, the kind of segments you're eyeing and your outlook going ahead for FY22.
See, we aspire to be a universal bank, and it's not like we do need regulatory approvals to do that. And before that, we have to finish 5 years of operations, which we will complete in January of 22. However, we've also been saying very clearly that for us, the first priority is to be able to reverse merge the holding company and the bank. And after that, we would be examining the whole option of converting ourselves into a universal bank. Okay, so that's one thing. The second thing, as far as the next financial year is concerned, I think we have been able to bring the growth back to pre-COVID levels or even better than that in a lot of our businesses. In some of our businesses, we are doing our ever highest levels of businesses also, especially in affordable housing and MSE loans. So I think the next year is very clearly charted out for a good recovery of growth, which we lost out in the first 8 months of this financial year. And we do hope that we will have a fairly stable growth in the AUM. We will also be able to increase our share of retail deposits. And the liabilities franchise, in many cases, will be doing pretty well for us. We would also be looking at expanding our network in the next year. So I think all in all, it's safe to say that the next year is going to be a growth year for us, whichever way you look at it.
Okay. And even though financials have improved for banks, post the pandemic, they're not necessarily fully reflecting what the last year has sort of brought about. What's your view? What do you feel will be the kind of asset quality trends that we are witnessing at the moment and that we will continue to over the next couple of quarters?
So like I just said, some banks have recognized, banks like us have already recognized and provided upfront. So we have estimated the kind of impairment that we can expect based on the trends that we are seeing right now in the repayments and the slippages. We have taken a decision to upfront that. Some banks would probably be recognizing some of that in Q4, some of that in Q1. But I think the big one would be really the ECLGS scheme. Once the 1-year moratorium gets over, we would really need to watch out for that as to how that plays out. I do expect not too much of a variation between different banks in terms of the kind of gross NPAs or other credit quality issues that will come up in the next financial year. But yes, I think it's reasonable to expect that some of that will show up in the next financial year, some of that will show up in Q4 also.
Okay, thanks. I was looking for a little bit more from you on that, so that gives us a better idea. What about consolidation in the banking space as well, Nitin? What's the kind of roadmap there? What's the kind of nature of consolidation you see for the sector and also for Ujjivan in particular? Would you look at inorganic opportunities?
Well, I can speak for ourselves. I don't really have a view on the industry level consolidation, quite honestly, right now, because I think we need to wait for a few more quarters to be able to come across the real picture. But in our case, we have always said in the past also that we are open to acquisitions, mergers and acquisitions. We are also very keen to diversify into secured lines of businesses. We are also very keen to bring on board some candidate who we can merge with or acquire, where we get a tech advantage. However, that's just a theme. There is no plan right now. And like I said, for us, the most important thing is to be able to get the approvals for the reverse merger and then go through the whole process. And only after that, I think we would be probably looking at any kind of acquisition. But in the meantime, if there is something that's very interesting and it suits our overall long-term plans, we would be open to that.
Sure. Just as an experience also, Nitin, just wanted to understand as to how digitization has transformed the way of doing business/banking and what then is the impact to the cost to income ratio?
Well, I think for all of us who've been observing or have been a part of this whole digital journey, transformation, whatever you call it, I think we have seen it firsthand that the way banking is done by customers has really changed. That is number one. The way banks are interacting with their customers or processing their requests or applications or dealing with them, onboarding with them has also undergone a change. But I think the most important thing is really the coming up of the full collaborative ecosystem, between the banks and the fintechs and many other like-minded partners. And that is, I think, that gives us a lot of hope for future, because I think we'll be able to put to use a lot of good quality and contemporary and forward-looking technology to the best use of both the bank as well as its customers. So I think these changes are irreversible because the consumer behavior has indeed changed, and it will continue to change. Customers will be more discerning, they will be more demanding. And I think it will be important for banks to be using a lot more data, a lot more technology to keep improvising on their customer experience. But I think it's only right to say that the digital transformation is probably half done. What is not being done, and that is where we come in our segment of customers, is that these smaller borrowers, smaller depositors were probably not included as much into the overall digital transformation, except for maybe the payment side of it. And that is where we see a lot of opportunity in being able to also bring them into the mainstream of digital transformation.